Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, January 27th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give individual investment advice. This is for informational purposes only. Please do your own due diligence on any ideas presented. It's your money. It's your responsibility. Okay, let's get into this week's info. So, again, we're in this time frame on when we're talking about economic data where, again, you can get into the battle of the data points where depending on what your view is, you can present data that's negative, or if you're positive on the economy, you can present data that's positive. For example, consumer confidence has been up recently. But what I'm trying to do in this is not be an economist and predict what's going to happen necessarily. What I'm trying to do is I have an understanding of the fact that because we're in a credit-based debt-fueled society, financialized society, if you will, in the U.S. and mostly in the developed world, where debt is the main driver of economic growth, or such that it is, that the Federal Reserve and the federal government are very involved in the economy. They shouldn't be. I don't like that they are. That's immaterial to the conversation. And so one of the reasons why I think it's wise to at least nowcast, which means look at the data as it is because, typically what we have seen in the recent past over the last 20, 30 years in the US is when an economy when the U.S. economy weakens, what does the federal government and the Fed do? The Fed lowers rates and even more recently engages in quantitative easing. That's what I call the bazooka, the liquidity bazooka. And as you know, to expand on this further, as I've said it before, I am of the view that in the short and medium term, liquidity and market sentiment drives these markets. And so I think it's incumbent to at least have a view, or at least try to keep your finger on the pulse of when the Fed may fire that liquidity bazooka, because it has a really big effect on what the economy does or what these markets do. Okay. And so I have put together a list of indicators that I've followed, and trying to keep track of what's happening. So again, if you want to try to do forecasting, most economists are not very good at that, including the Fed's own economists, but trying to keep our finger on the pulse of what's happening. And one of the things that I have found so far is that we have manufacturing now has been in a recession for over a year. Service sector PMIs are just slightly above contractionary. The housing market is a mess, and but yet employment is supposedly what's holding things up, because as long as people have jobs, especially people that aren't super wealthy people, but working people, they have a propensity to spend. And so if they have an extra $100 in their pocket, they don't save or invest it for the most part. They're more likely to spend it. And so that's what, because the U.S. is a consumer-based economy, as long as employment is hanging in there, and it seems to be, at least for now, although it seems to be cracks developing in the edifice around it, then it would suggest to me that consumer spending will continue and hold the economy up. Consumer consumption is like between 70 and 80% of the U.S. economy. So, as people have jobs, you put an extra $100 into a regular middle class guy's wallet, he's going to take his family to the movies or his wife to dinner or something like that. So, what we're starting to see, though, is that the labor market, I've said this in the past, that the indicators I look at, it looks like it's cracking. One of the things I find significant is, I've said this before, is that you have these headline numbers that come out from the federal government or BLS, whoever, and they'll tout like, so many jobs were created, whatever the statistic is that's positive for spin for the leadership that's currently in power. And then what you don't see further down in the report is the revisions from previous months. And that ultimately the number that gets reported in real time that you see the headline on actually ends up getting revised. And what we've seen is many of those numbers are getting revised downward. And so this is art off of Twitter I thought was interesting to point out. This is the percent of states with a 3-month average unemployment rate greater than 0.5% above the 12-month low. That's the SAM rule, which we've talked about before. And you see that it's increasing, right? And the SAM rules talks about if you have a 5% or 0.5% move in the unemployment rate in 12 months, that's typically leads to a recession. And you can see what's happened in the past. The gray areas are times of recession. This goes back to 1977, 76, something like 77, it looks like. And so you see the gray areas where the inflation's rates were, and they, went back. Again, pattern. John's not like super intelligent. I'm talking in third person here, try to be a little bit humorous. But I do understand pattern recognition. And so, again, this is why I kind of look at these pattern recognition things. Every time that this thing starts going up, we've had recession. So it would behoove us to watch this. Again, the comment made here is this series has never been this high outside of a recession. So again, when you're in the recession, you won't really know you're in the recession until after the fact, until the powers that be, the pointy shoes, a year later, go back and look at all the data and say, oh, yeah, by the way, the recession started on X date and ended on this date. That's typically what happens. But I would suggest to you that a lot of segments of the economy are in recession. Now, we see this super blowout GDP number. Okay, well, a lot of that has to do with just government spending. Okay. And government spending does, although it's inefficient, moves the GDP number, because if you know what the components of GDP are, but what are the underlying things? What's the gross domestic income? What's some of these other factors? Okay. And that's what the federal government has done since this particular administration, and even the previous ones when we're in power, just printing a bunch of money, issuing a lot of debt, and just getting that money into the economy. Now, that has happened to the detriment of our fiscal position, which is untenable long term. Again, I have to caution when I make these comments that I read a book by a guy who used to own a company called Figgy International. This is way back like 30 years ago. And he wrote a book about the unsustainability of debt. But that didn't mean that, it was 30 years ago. So just because something is certain, ultimately the bankruptcy of the United States and the decline of the dollar, doesn't mean it's imminent. Again, just because something is going to happen, everybody listening to this call and myself is eventually going to die. Doesn't mean you're going to die today or tomorrow. So the same thing with these debts, just because it's certain that if you continue on this trajectory, you will eventually go bankrupt, your currency will collapse, and you'll have economic stagnation and possibly social and political upheaval, doesn't mean it's going to happen next week. And so you need to keep this in the back of your mind, though, that certain trends are untenable. It doesn't mean they're actionable. But getting back to this is I do believe that, we're already several pockets of the economy are in recession. So that's why you have this discussion of soft landings. That's why you have this discussion around, rolling recession. I don't believe that. I believe that they will continue to keep rates high, which I've said for a long time, and continue the QT to the point where, you can have these little arguments about, are they actually tightening? Eventually something's going to break. I put out in the weekly free email last week, the 60 minutes segment on commercial real estate. That's a disaster. That skeleton hasn't fully popped out of the ground yet. It's kind of akin, right, to this commercial real estate, to the final ending of Poltergeist, when they run out of the house into the rainstorm, and the developer had built the subdivision on top of a graveyard, and all these skeletons and coffins start popping out of the ground. That's kind of the what's going to happen probably with commercial real estate. We don't really understand exactly what's buried out there yet. But again, there's a lot of landmines. Again, I go back to what like David Rosenberg said. Tell me what is the catalyst for this economic growth? Okay, just the federal government continuing to spend, at wartime level deficits that were exceeding the spending that we did during World War II. How is that sustainable? I get it's a presidential election year and all stops are going to be pulled out, but it's not sustainable. And so if that's what's holding up everything, that's not, that's why you have this push and pull with the Federal Reserve trying to get inflation under control and the federal government, putting all this money into all these ridiculous boondoggles, green energy and building chip plants in Arizona and all this other nonsense, this Soviet central planning. It can juice the numbers of GDP in an election year and create a spin narrative that Bidenomics is working. But what you'll find is most people are not, they don't feel like their lives have improved. That's the problem when you see survey after survey. Now, again, we did see consumer confidence improve over the last couple of months, but that's kind of a volatile, you ask anybody on any certain day how they feel about things. Well, I mean, it is what it is. So we have to watch this labor situation and unemployment and what's really happening, because why? This is the last leg of the stool of the bulls argument, in my view. So we shall see. Again, I mean, guys, when we talk about stocks or asset classes that go parabolic, it always and every time ends in disaster. It's not sustainable. This is the federal government current expenditures interest payments. So again, we cracked the 1 trillion mark a while ago, and this is just not sustainable. I mean, you're spending more on the interest on the debt. The debt is now like $35 trillion. Again, I've made predictions that I think will be over 50 trillion by the end of this decade, if the markets allow us to get there. If the bond market doesn't, implode on the way there, and then this is going to be detrimental to the dollar, because ultimately when they can't sell the debt or roll the debt or manage that level of debt, they're going to have no other option except to do what historically has been what other leaders have done. The easiest way to do things is not have austerity, not actually cut back, not actually budget like you're forced to do in your personal life, or you're forced to do in your business, or you won't exist anymore. But these governments throughout history, this is what they do. And the path of least resistance is just to monetize the debt. That's what's happened throughout history. It always leads to problems every single time. You will not avoid the economic, political, and social issues that come along with that. Again, I have said this before, and I will get into, I can get into this a little bit later. I've made various predictions. I don't think the EU will exist in 20 years. I do not think the United States. I make these bold predictions and everybody scoffs, but I have been I look at trends. Where's the trend? The United States will more than likely not exist as a contact political entity within 20 to 25 years. How? Do you see what's going on? We have the federal government that, in my view, is a neo-Marxist oligarchy controlled by an oligarchy, managerial class, central planning, neo-whatever Marxist entity. And that's half the country. It goes along with that. And the other states are down there, and they're getting this big fight now about the border. And you can have whatever political view you want on it, but a government that won't control its borders shouldn't exist. That's a central, we can have a debate about what the right level of immigration is into the country and what type of immigration we should have, but just having this totally out of control is just completely irresponsible. Okay. And it's being done for a reason, in my view. Okay. It's to undermine the class of people here, middle classes, people that built the country. And I will say it, white people and African Americans. African Americans suffer more than anybody by this unrelented you know, low wage, undereducated classes of people that come from everywhere, restricted, just wide open. Okay, it's not how you run a country properly. Okay, the government should be doing things. It should exist to have order, not chaos. And you just have chaos everywhere. You have chaos in the cities, chaos at the border, chaos in the foreign policy, the age of chaos, as I have said before. Now, I don't want to get into the spiritual and religious implications of all this. I have my own views. It's probably not appropriate for a financial discussion, but this is not going to stand. Okay, this is not going to lead to prosperity. Chaos. You don't get, these people that are running things now in all of our institutions are enemies of the true, good, and beautiful. They are the agents of chaos, evil, and the ugly. And those are my views. And that's how I trade things. I mean, look at every sphere. This is either the most incompetent group of people that have ever been allowed to run anything, which is quite possible and probably the most likely, or this is just an evil plan to just completely destroy the United States. You can pick it, but this is not how you're going to have prosperity. Explain it to me. I don't get it. And this is part of the problem. This is a result of the irresponsibility and the evil and the thoughtlessness and the incompetence is just running up debts and thinking that's just okay. I get the politicians' view. They're incentivized. They pay no price for doing these things. They pay no price. So what? If you vote harder and get them out, it's still the same managerial class in charge. I'm going to say something very provocative, and a lot of people will disagree with me and not like it. If you want to have real change, effective change, things that really change, it's not done by voting. I'll leave it up to I'm not going to say, you can look at history, let's put it that way, where real change happened that was, long-term, whether it was good or bad in any society, it's not done by voting. So I'll leave you with that. I don't want bad things to happen. I don't wish it to happen, but it's probably going to happen. That's history. And we have this view of American exceptionalism, which I don't agree with. Basically, what we had was a country that had two moats around it, that was isolated from these various world wars and conflicts, and was able to really grow unfettered with a bunch of people that had a certain ethic and unity. Even though there was differences, we were able to work through them and correct them. And now what we have is just total chaos. And we have two groups of people basically representing half of the country each that hate each other. And that's not going to be effective. And one group is trying to subjugate the other. It's just not going to end well, folks. Okay? Because you can't subjugate 50% of a population without using extreme amounts of violence. They simply are in a country with, 500 million guns. It's just not going to work out well, in my view. So these are, we're getting off track a little bit here, but this is not good. This is a symptom of the chaos, the symptom of the incompetence, the symptom of the people that are the enemies of the true, good, and beautiful. It's not just in the U.S., it's in the entire developing world. Okay, here nominal GDPs, here's a nominal public debt. Okay, you have Spain, the UK, the US are the worst offenders. They don't have Japan on here. Actually, Japan is the worst. I don't see it on here, but anyways, you get the point. This is not isolated to the United States. If Canada, it was actually pretty interesting to see Italy being, at least relative to the rest, not kind of with Germany being the most responsible, right? At least, so you have at least GDP and public debt in Germany, they've been very good. And it looks like Italy hasn't been as bad as a lot of people think it has been. But the worst offenders have basically been, the UK, USA, Canada, and Spain, at least in this, and I guess maybe this is cherry picked again, but this is not sustainable. This is partially why the West is in decline. And this public debt getting out of control, these are symptoms of populations that have no virtue. You keep electing these people that keep doing this, so the population must be okay with it. Now you will say individually, I don't agree with it, but the majority of because your countrymen, the guy that lives down at the trailer park that gets high every day and doesn't work and is cheating, unemployment, getting disability that he's really not, and all that. He's not your ally. He's not, you live inside the same bailiwick, but he doesn't have the same interests as you. Okay. And this is the problem. People don't have virtue anymore, and they feel entitled and they want free stuff. This is how it is. So going back to why I think the bazooka is going to be brought out here before too much longer. This is the excess savings. This is, as again, from pandemic to the response, there was over $2.1 trillion. It peaked in August 2021 of excess savings. One of the things I'm going to be writing about in the February issue of the Actionable Intelligence Alert newsletter is something I was turned on to by Copernic Investors or Investment Management. It's a investment management firm down in Tampa, Florida. They have pretty good research. And I had heard this term before, but I read a whole bunch of their research papers, and they really unpacked it for me, and some other links to some other folks that wrote about it. But the Cantillon effect, about how money gets into an economy. And it really opened my eyes specific to, I remember during the initial bouts of QE after the great financial crisis, and there were a lot of commentators, and myself included. I wasn't commentating them, but my way was looking, is like, if they're going to print all this money, we're going to have massive inflation. And we never had the massive inflation. We had a ton of money printing. The balance sheet was blown up. They printed a bunch of money, bought bonds, bought MBS. And I thought, you print this level of money, like Milton Friedman said, you're going to have price increases. You're going to have hyperinflation. You're going to have, it never happened. And I was just like dumbfounded. Why did this not happen? And then I started realizing, yes, we did have massive inflation in asset prices. And I finally have been able to get my thinking around why that happens. And a good explanation is the Cantillon effect. And this Cantillon guy, like I said, I'm writing about it in the February issue of the Actionable Intelligence Alert newsletter. How money enters into an economy, why you have inflation. The reason we had inflation, well, twofold recently during this pandemic, was twofold. We basically shut the economies down, so supply was restricted. And then we printed a bunch of money, but it entered the system directly into the pockets of consumers. And so you put all this money, you sent checks to people. We had not done that in the GFC or at other times when we had engaged in money printing. What had happened is, the Cantillon effect is the closer you are to the money printing, the more you benefit. And so who's closest to the money printing? The banks, the pension funds, the insurance companies, the hedge funds. Why? Because what does the Fed do, or what it buys when it wants to lower rates? Well, it has to take bonds out of the system, right? Okay, it raises the price of bonds, that lowers the interest rate. And how do they do that? Well, they create currency units out of nothing, and then they give them to whoever is holding these bonds and these securities, which are, wealthy people and institutional investors. And now the institutional investor sells their bonds to the Fed. Fed places it on their balance sheet. They get currency units, and now they have to do something with it. So what do? They buy stocks, they buy real estate, and this thing starts to snowball. So then you start seeing the stock market move higher, right? See, the thing with the Cantillon effect is it's like the Mississippi River. Somebody used a good analogy. The headwaters of the Mississippi River basically are way up in Minnesota. And if you double the amount of water in the headwaters, well, that doesn't immediately raise the river level in Memphis or in New Orleans, okay, or in St. Louis. It takes time. And as that water flows down, as it makes its way, through Minnesota, down Iowa, Kansas, all as Mississippi flows, Missouri, all this stuff, other, we won't take into account the other tributaries that flow into it, but let's just double the amount of water in the headwaters. Well, as you go through different areas, maybe you overcome a levee here and the water spills out and causes a flood. Well, that was unanticipated. Okay, it's the same thing that happens in these markets. As you increase this money into the financial system, you don't know where it's going to go. This is why you have asset bubbles. This is why you have things like Bitcoin and why Bitcoin's such tied to liquidity. Okay, that's why it is tradable and a speculation based on liquidity. This is what happens with gold. You don't know if gold's going to go up. Commodities. So eventually, as this new doubling of the water or the doubling of the money supply increases, well, then you don't know exactly what it's going to flow into or how it's going to make its way down the river, and how it's going to affect the different areas. Okay, you can kind of have an idea, but you won't know exactly until it happens. It's the same thing in these financial markets. You don't know where the bubbles are going to be now because of the amount of money that's being created and will be created. I mean, this is why you have these tremendous asset bubbles in stocks, bonds, well, until recently, bonds the last 2 years, housing, Bitcoin, all these types of things that have blown up and then they burn out. And so I think understanding that is important. The reason, once you put the money, getting back to this graph here, you put the money directly in the consumer's pocket, then you restrict supply. Of course, you were going to have consumer price inflation. You're restricting economic activity, but increasing the propensity for people to spend. Okay. That's why I've always thought this inflation has been somewhat transitory. But anyways, getting back to this, the original discussion we had at the start of this week's report, with being a consumer economy and this propensity to spend, and now the fuel is running out. That's why you're seeing credit card debt exploding, because people have gotten used to a certain level of spending, a certain lifestyle. They can't maintain it anymore from savings, so they're turning to debt. And so again, as this runs out, does the federal government, the federal government is still spending money again, but who's benefiting? If they're not sending checks directly to people in trailer parks or the middle class or what have you, that are going to run out and spend the money and go buy a car or whatever dumb spending they did, that gets the economy juice. What they're doing now is they're giving it to the oligarch and managerial class. We're going to build, green energy projects. We're going to build all these charging stations. We're going to build chip plants in Arizona. We're going to do this. We're going to do that. We're going to do this central planning. Well, it doesn't necessarily make it down to the consumer and his ability to spend on consumer goods. So you can have higher GDP, but you necessarily won't have higher consumer spending. So it's, again, convoluted, but I think if you go and look that up, Google it and read, go to Kopernik Investment Management. They have papers on this and they link to other people that have written papers. It's very fascinating. This Cantillon guy was in the late 1700s in France. He actually was, I don't know if he was an associate, but he was with John Law. He made a lot of money in some bubbles back then, the Mississippi bubble. And things like that. So this guy actually understood. Basically, the theory was the closer you are to the currency. In that time, they didn't have paper currency, so to speak. It was gold, right? So the closer you were to the king, and the closer you were to the king's and the government spending, the more you benefited. And it's the same thing nowadays. The closer you are to that money printer, and whoever gets that money first benefits the most. And eventually, some of it happens to trickle down through wages and stuff like that on these boondoggles to regular people. But anyways, fascinating, something I would encourage you to look at. You can get a primer on it. If you are a subscriber, you'll get the benefit of reading that article next month. And if you're interested, that's the kind of stuff that I talk about in the Actionable Intelligence Alert newsletter, and how to benefit from that. But anyways, getting back to this is another thing that's slowly evaporating that I feel is going to have an effect on consumer spending. So Game of Trades, another one of our favorite folks to follow on Twitter. I suggest you follow them. They put a lot of good charts up. Housing buying conditions. People don't feel like buying homes today. Buying conditions for housing as surveyed by consumers. Okay, this goes back to 1960. These are the buying conditions equals share reporting good conditions minus share reporting bad conditions plus 100. Long story short, we have the worst buying conditions since this thing was back to 1960. Okay, and you see what happens during these recessions. Okay, it collapses, right? Well, at least in up till the 1980s. And so I don't know how this is. I don't know what this really means in real life, but if you follow the housing market like I do, it's not healthy. Okay. Now there is pent up demand for housing. We've talked about, why prices are still high and how things are frozen because of rates, and a lot of people locked in low rates and now have locked themselves in. Again, you're not going to sell your house for 400,000 and then go have to buy a house for 400,000 and pay twice or more the interest rate and basically double your mortgage payment. Who would do such a thing? And so that causes labor mobility to slow down, a whole bunch of other problems. So anyway, I just find this fascinating because it's such an outlier, from what we've seen. And this is just a result of the Fed raising rates, from basically 0 to 5.25%, and seeing mortgage rates go from, in some cases slightly less than 3% up to 7 and change. And I think that at one point they hit 8% a month or two ago. So that's just not going to be, and then prices just haven't come down like you would think they would do in this type of environment. So we'll continue to watch this, and I think that housing has to reprice lower. Can you imagine why would the Fed cut rates now with the stock market making recent all-time highs and the housing market still hasn't repriced significantly lower? It doesn't make sense. They're not going to do it. Something has to break that's going to force them to cut. Believe me, they want to print money. They love printing money. Okay. And they need air cover. They need an excuse, because if they can't get the inflation rate below 2, why are you going to cut rates into a record stock market and, housing? Those things will just explode. Again, the Cantillon effect. So we need to see something break and crack. And so far, we haven't seen that. And so we continue to wait and be very selective in what we're buying and what we're doing in the newsletter. Again, talking about bubbles, Mag 7 stocks now bigger than every other country's market caps except the US. So here you have the US stock market cap, right? And here's the Magnificent Seven. Then here's all the other countries. So the Magnificent Seven market caps are higher than every other stock markets. So again, I asked the question, would you rather own the Magnificent Seven for the next 10 years or just an equal amount of all of these stock markets? I would probably take the equal amount. When you get this much overvaluation, it doesn't end well, folks. It just doesn't end well. That's the historical narrative. And you can say AI, you can say technology, you can say new era. And if you say that, you're not a student of history. You don't understand. I've been in these markets. I've been through the last 3 or 4 bubbles. I've seen the same excuses made for the same overvaluations over and over. And every time, if you buy overvaluation, this is what I've learned from doing all the reading of all the successful investors. If you buy overvaluation, your performance going forward, maybe in the short term, maybe a quarter, maybe a year, maybe 2 or 3 years, you'll outperform. In the long term, you will underperform. You will underperform drastically. What I do is I sell overvaluation and buy undervaluation. That is how you have long-term success in the stock market. You can argue till your face is blind. You can say that you're the guy in Mag 7. Okay, congratulations. That's not going to be most people's, if they are buying these things now, that's not going to be their results over the longer term. And how can we just judge somebody? This is the problem. People want to look at short term. What is the performance over an entire market cycle? That tells you, over a couple market cycles. That tells you who the real performers are. And again, if you go to Compounding Quality on Twitter or X, and the guy offers like thousands of pages of PDFs of all these famous investors, and you will notice the same narrative. They don't buy overvalued securities. They buy undervalued securities. Then it's just a matter of training yourself to identify and buy undervalued securities. It's really that easy. It's pattern recognition. Again, if you want to buy NVIDIA and think it's going to, take over the world, and it's, that's your prerogative. I don't think that that's going to work out for you. Again, we have NVIDIA here. This is a tweet. They don't put the market caps, but this is something I've seen before. Just a reminder, because I asked this on the Discord channel, of which you can access as a member of the Actionable Intelligence Alert newsletter. But anyways, we talked about this on there. Is like, would you, if I gave you $1 million and said you have to put it into either NVIDIA stock or a basket of these stocks, these oil companies, energy companies that all pay dividends, okay? And you had to hold it for a decade, what would you rather do? And so that's the question you really have to ask yourself. Do you feel confident? What's overvalued in this tweet and what's undervalued? So this was a CNBC article, uranium getting more mainstream. We've talked about this. One of the things I want to make comment on uranium, it's amusing to me. I find it amusing. There was actually, I think, the last week or two, we had the big run up. We were talking about uranium every week, bang, 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 up to 106 on spot, blah, blah, blah. And then it kind of pulled back recently. And, the shiny lure got obscured in the weeds for a week or two. And people were, I'm taking profits. I'm out. This is over. I mean, this is just like mind boggling for me. I mean, are people actually trying to trade this? Guys, just find good companies and hold. We are going much higher. Okay. This is a chance to create generational wealth for you and your family. You don't have to get cute with this. Okay. We're getting ready to have the Kazatomprom and Cameco are getting ready to have conference calls in the next week or two. And, both of them are not, these are the people that are actually producing uranium, and neither one of them is meeting their targets. Okay. No appreciable supply is coming online. Okay. Yes, we have Encore in Texas turned on a little plant. UEC's talking about turning on a plant. Denison's talking about turning on a plant, but this is like, spitting in the ocean. Okay. Paladin seems to be working up their Langer Heinrich back online. These are not going to do it. Where are the big greenfield projects, 10, 20, 30 million pounds a year, Arrow? When's that coming online? What's going to happen when Kazatomprom supposedly can't meet its production goals? Okay. And yet I'm going to show you a chart that nuclear power generation is going to hit an all-time high next year. Okay. And continue to grow. You don't have to get cute with this. This is like the no-brainer thing to do. It's going to be secular, longer-term market. Okay. And it's very fun to sit around, I know, intellectually, well, what could derail this besides this? Well, if the price gets too high, governments are going to step in. We are years away from that happening, guys. You don't have to get cute with this, okay? This is the best setup. The second one that's below this, it's the best setup, is offshore services, and it's not even close to being as lucrative as this uranium trade is. The only thing that derails this is if you have a big nuclear accident or something like that, or if Ukraine, causes one of the nuclear plants to blow up and cause a bunch of problems and try to blame it on Russia in a desperate attempt to change world opinion and get support, something crazy like that. Okay, and that doesn't even derail it long term. In the short term, everything would crash. It would be just like Fukushima, because you have no choice unless you want to go back to medieval times. Okay, energy is life. Energy inputs are required in order to economies to grow, for us to advance, to have excess production and wealth that we can channel into new research and technology, the arts, everything. Otherwise, energy return on energy invested of 2 to 1, relying on the sun and crops every year, means a medieval lifestyle like in the Dark Ages. That's why this is going to continue to grow, because we have billions of people that are now entering the S curve of their energy demand around the world. That's why this is going to continue to grow. And there's been tremendous underinvestment, lack of leadership to allow. How does several U.S. governments, both Republican and Democrat, which have capital ships of the U.S. Navy powered by nuclear power, How do we have our electric base load, which is close to 20% of our base load electricity production in the US, and we have no real domestic uranium industry here? This is, again, part of the age of chaos, incompetence, lack of leadership, as I keep reiterating. We got, the same, and you have the build outs increasing, not decreasing. So I don't, I'll be with you if you're out there trading this and you're good at that and you're saying, you know what, John, you're an idiot. I am an idiot when it comes to trading. I don't trade short term. I've not ever been, it's not something I can do. I can't hit curveballs, major league curveballs or minor league curveballs either. That's why I never became a professional baseball player. Okay. And I can't trade short term. What I can see is secular long-term trends and then get on them and ride them. That's how wealth is created. There's going to be those guys out there that are trading it successfully that are smirking right now and go, well, you're the guy. You're the man. Okay. And I give you your props, but that's not most people. So, people have to create content online. They have to talk about something. And so that's what they start talking about. Well, we're going to have a short-term pullback, and then it pulls back 10%. And then they, run around and I'm the man. Okay. You're the man. Okay. Because you got to have content because you're a content creator. I get it. You got to keep some kind of discussion going. Don't fall into that trap, guys. Okay. You're in a bull market. You're in a secular market. What do you do in secular bull markets? You buy on dips. That's all. So you should have your buy list. You should, understand what's a comfortable level for this. This is, you're going to have volatility. We've talked about this before. We had volatility. We just came out of a period of over a year where nothing happened and everybody abandoned the space, but the fundamentals continued to get better. I didn't leave the space. I just sat here. I don't have to do anything but sit because I know what's happening. And I have the conviction because I've done the work. If you want to trade it, if you want to chase the shiny object, you're not going to be successful investing and speculating. All right, getting back to CNBC, this is all stuff you guys should already know. But anyways, the world's largest miner of uranium, they're talking about Kazatomprom, is staring at production issues over the next 2 years. Kazakh mining company Kazatomprom cautioned it is likely to fall short of production targets through 2025. Kazakh mining company Kazatomprom recently cautioned that it is likely to fall short of production due to construction delays and, quote, challenges related to the availability of sulfuric acid, unquote. So sulfuric acid is critical in the extraction process as it is used to leach and recover uranium from raw ore. Then we have a quote here from Guy Keller, who's really good. You might want to listen to him. I think I have in the free email this week, a interview that he did with Crux Investor that was posted on YouTube. He runs the Tribeca Fund. He's big into uranium, smart guy. He says, quote, "We're coming from a decade of undersupply." He added that the deficit will continue as, quote, "we're in the middle of the biggest reactor build program in decades," unquote. So there you have it, folks. Not really much to say. You're riding the bull, the bronking buck. Just stay on. Just stay in the saddle. That's all you have to do. You'll stay in the saddle. And if you have done this correctly, do I think that the returns are going to be the same as if you bought things at penny of the dollar? I don't know. A big part of the move has taken place. No one can know the future. Everybody has a view and an opinion. I've said before that my first targets are to exceed the inflation adjusted high, and that's over $200 a pound. When do I think that will be achieved? Unknowable. And then once we get there, we go from there and see how the market has developed and what's really happening. Again, this plays into the age of chaos because we go back, we can have an hours-long discussion about how the Russians have basically a lot to say about where new uranium from Kazakhstan goes, with respect to former Soviet republics. Somebody pointed out on another call, it was Justin Hune. He put out a thing from the guys from Ocean Research, and they were on there. And one of the things that was noted was, Belarusia and Kazakhstan are two of the former Soviet satellites that are still close to Russia that haven't had color revolutions. If you recall, they tried to have a color revolution in Kazakhstan about a year ago, and the Russians sent paratroopers in and put it down. So there's a reason why that happened, because the Russians want to be in control of this new production. And so there's a lot of things happening at Kazatomprom that I don't think anybody really can know without really going there and having the connections. But you don't have to. I mean, it doesn't really matter. Even if Kazatomprom was able to meet their production targets, it wouldn't be enough, right? And so anything that causes supply disruptions, and as they get into the market and everybody acknowledges that, okay, yes, they missed it by this much, everybody gets it now, uranium will reprice higher. Again, it will reprice, it will continue to go up until it reaches a level where sufficient capital comes into the market and develops these uranium mines. And that's a decade plus endeavor for anybody that starts today. And I don't see anybody announcing big plans to do anything. So we still have to go through a mergers and acquisition cycle. There's going to be all kinds of positive news over the next year, 2, 3 years. And things, and as these market caps increase, more institutional money is going to come in. The big boys really can't come in now. They're not going to come in and buy, Encore because they turned their mine on in South Texas. You can as a retail investor. You can as a smaller fund. Okay, but somebody that's running billions of dollars isn't going to go out and buy UEC or Denison. They can't. It's just not going to work. So eventually that will happen as these market caps increase. I think that will happen. And I think, hedge funds want to make money. And if they sniff out blood in the water, then the capital is going to come. So again, it's just a matter, I think, in my view, of being patient and, ride the wave. I mean, we've been right on this. Again, I want to get back to this. This is a opportunity to create generational wealth for your family. This is, if this is done correctly, and you come out the other side and sell, as close as you can to the top, and you're going to open up a lot of opportunities for yourself. Let's put it that way. And I've never seen anything like this. I'm actually, I will say, I think I've said this before, there was a period of about 18 months ago, maybe 2 years ago, I had really loaded up. And yes, we had an initial move, when the price went to like $35 or $40. And I'm like, do I have this right? Is this working? And there was just nothing happening. Nobody talked about it. This was back like the time I did the interview with Malcolm Rawlingson. It's like 4 or 5 years ago already. And I'm like, nah, this has got to happen, because, the way, it's just physics. Where are you going to get the energy? And I think I had the benefit now. I never really wanted to get into renewables. I was kind of forced into it when I was at Duke Energy. The plants that I was working at were fossil plants on industrial sites. We supplied steam and electricity and other services to various industrial sites. We took over their assets and ran them more efficiently, turned them from loss centers into profit centers. And then, we shut that business down after the merger with Duke. And then I was like, if you want to keep working here, hey, there's a job for you in wind. We're going to expand this wind. And I got into it. And I was like, this is so Mickey Mouse. I originally attributed it to, being in fossil, being around nuclear power. It's serious people doing serious work. I mean, everything has to be right. The inspection processes, just the engineering. And what I found in this other industry was, at first I attributed it to being a new baby industry and it would mature over time, but it's rinky dink. It's just like, and I thought to myself, this is, I'd be sitting out on a plant where I have a 400 megawatt, after I did the commissioning of this plant, I was a commissioning manager during construction. And then I got put into plant management of a 400 megawatt wind farm. And I'd be sitting out there and there'd be days where I have this $500 million investment and there's nothing being generated because there's no wind. I thought to myself, this was like the best education. That doesn't mean I'm against it. I'm agnostic, okay? But I started realizing this isn't going to be the salvation that everybody's putting it out to be. We're not going to run an industrial society if we have to stop. I used the example several times way back in videos like 2 years ago, understanding like how an electric arc furnace works. in the steel making, where you dump, ore, processed ore and scrap into this ladle and then stick some graphite rods and a cover on it and put about 100 megawatts through there of electricity and melt it down. Okay. So you have to have reliable power to do that, because if a cloud comes over and your solar farm isn't producing or the wind stops, you can't stop that process once you start. And I started realizing it's the same thing with data centers also. You have to have reliable power. That's what enables the processes of industry and civilization. And that wasn't kind of why I had the conviction that I had. I guess I feel super fortunate that I was exposed and so knee deep in the industry. Yes, I had great success. I still have great success in renewables, and the renewables are going to continue. And again, my view on these things is very simple. I'm more from self-interest. I told somebody in a job interview one time several years ago, they asked me, because a lot of these firms are very green, ESG. I mean, they're even worse now, but this particular firm was going that direction. I was asked by one of the principals, what's my view on, renewable energy and all this climate change? I said, look, man, I'm just a guy. I'm a construction guy. I'm a project manager. If you want to build ice machines in Antarctica, I'm happy to do it if you pay me. I have no opinion. I'm not a policymaker. I'm not going to get in that. I have my own views. I know how to build things. I know how to bring projects in. If that's what you want, pay me and I'll do it. But that's how I kind of approached it. But I think that the evidence is clear, and now that's why we saw the shift recently in the zeitgeist back towards nuclear power. People understand that base load power has to be the foundation of the electric grid, and they don't want to do that with coal. And you can only do so much with natural gas because of supply issues and geopolitical issues and transport issues and where the gas is and where it needs to be used at. So what you can do is build a nuclear power plant. And so I think, I was always of the opinion that we would come back to that. And so I think we've done that. And I think if you look at it, if you start your thinking on uranium back on that level, then you start ticking the boxes of what's possible and what's going to happen as several billion people move through the S curve into the middle class. They're going to want, the power to be on 99.9% of the time. They're going to industrialize and have businesses. I have been to third world countries. I've lived in them. You're sitting there working, all of a sudden the lights go out. I mean, and you don't know when they're coming back on. And all of a sudden they just come on randomly because of the lack of consistency that they have in their energy system. And that's not conducive to being productive. And so I think a lot of people take a lot of things for granted in the West. And so, I'm kind of meandering here off, but this is why I think we still have a long way to go. And I wouldn't, understand that when you look at social media, because I am a content creator, people need to create content. And so they always want to talk about, I mean, excuse the term, but a lot of it's just mental masturbation. Okay. It's just talk for the sake of talk, because you got to talk about something so that you're out there and you're relevant, because you got to create content. And so let's talk about the fact that uranium pulled back. I predicted it. I mean, I'm not saying I did or somebody on social media, and I sold and made money and I'm coming back in. I mean, I wouldn't, that's not how I would do it for most of the people listening to these videos. Okay, let's move on. So Robert Friedland was talking about copper again. Copper market ready to explode. Article in the show notes. Where there are articles that I'm referencing in these slides, I will try to put them in the show notes. He goes on to say here, the physical market for copper is very, very tight and now in deficit. That's from Robert Friedland, who is a billionaire from all of his activities in copper over the years. And he goes on to say, and with the Federal Reserve rate cut on the horizon, the metal is set to explode this year, said Robert Friedland in an interview with Bloomberg. According to the copper mining executive, the dollar-denominated price of the metal is likely to, quote, go up a lot by the middle of the year. Quote, we think copper is making a bottom. I'd be willing to wager on $9,500 per ton before you go down to $7,500. Backing his bullish view on copper, Friedland pointed out that China consumed more copper in 2023 than in any other year, signaling that demand remains strong in the world's top consumer economy. Quote, so really this is like a powder keg ready to explode as soon as the Fed cuts in the second half. Well, we'll see. Again, that's my expectation. This is why another reason why I'm bullish on commodities. Again, one of my reasons for being bullish on resources is not necessarily demand, but supply, the underinvestment in supply. And of course, if you add more currency units, which the world is doing now, as I've explained before, we already started the next liquidity cycle way back last summer, as more and more central banks around the world are engaging in interest rate cuts and money printing. And so that's already started. The big guns haven't come out yet, the big bazookas like the US and the ECB, but that will happen eventually. And when that happens, I hope you're positioned, because that's when things are going to explode higher. That's my view also. Again, here's the tweet here. They have Mr. Burns, I think, from The Simpsons, the nuclear power executive here. It says, anyways, here, nuclear power generation will hit an all-time high in 2025, says the IEA. Remember a couple of years ago when they were going to get rid of nuclear power, was going to go away? I was chastised many times in the comments, you're an idiot, you're a fool. No rational person thinks nuclear power is a solution. I don't hear those comments anymore. Goes on to say, with China, most of the new capacity will come online in China and India. Yes. Many countries recently put nuclear at the center of climate strategies, sparking a, quote, revival of global interest in nuclear energy. So there you go. That's until you have some kind of disaster that derails it. I don't see it derailing. Wanted to talk about this. This is Yemen here, in case you didn't know, right around here. Here's the Red Sea. Here's the Suez Canal. Because of what's going on, Israel's here. The Houthis are supporting the Palestinians, and the way they're doing that is engaging to stop shipping going through here in their protests, whether you agree with it or not. That's what they're doing. And so what you see is now, instead of going through here and risking higher insurance rates or actually hits onto ships, a large portion of shipping traffic is now having to go around. I believe this is the Cape of Good Hope around Africa. So why is this? This is another consequence of the age of chaos that I've been talking about. Okay. And this is just another example, in my view, of the weakness of the United States. Why can't the U.S. military deal with this? The president said the other day, he was asked about, and he's not really there. It's unfortunate. I take no pleasure in, pointing out the fact that he's mentally degrading. But he did say that he was asked, I think, just in passing, if the airstrikes were working on the Houthis. He said no, but they're going to continue. So yes, let's just keep doing, this is a consequence of our unilateral support of Israel. I'm not going to get into that conversation. I'm not going to go there for obvious reasons, but there's going to be consequences. And so, what I think I will say is the neocons in the government, which slither between administrations and are part of the permanent state, and other factions, they have an agenda, and I think they see their window of opportunity. They really want to get a war going with Iran. Iran is a big supporter of the Houthis. These are both, the Houthis are Shias. And so what Israel would like to do, they consider, in the U.S. neocons, they do not want Iran to become the hegemon of this Middle East area, okay? And that's one of the things they're worried about, notwithstanding the fact that Iran is a supporter of Hezbollah, which is up in Lebanon, and Houthis and things like this. And so they're arch enemies. And so Israel on its own, I don't think, can defeat Iran. Iran is is not Afghanistan. This is a modern country with an industries and, 100 million people, 90 million people. It's not, as Doug Casey says, when you start messing around with Iran, you're hunting big game now. You're not messing around shooting rabbits like in Afghanistan. So I think the Israeli foreign policy of the right-wing government of Benjamin Netanyahu is to drag the U.S. and the neocons in D.C., some faction of them, a very powerful faction, sees their window of opportunity possibly closing, because I can guarantee you one thing: if President Trump is elected, he's going to shut all these wars down. I can guarantee you that right now. There's not going to be, and there's going to be a great purge of these neocons. So their window of opportunity is closing. That's why you're looking at this and you're saying, okay, well, we're failing in Ukraine. Nobody even talks about Ukraine anymore. Nobody cares about it. And so the focus is now on Israel, and now the Houthis jumped in. And so can we get this cranked up with Iran? The consequences of the age of chaos are that shipping is not going to do there and get sunk, and so you have the same amount of ships having to travel further. That's why rates are exploding. That's the consequence, and that's how speculators like I didn't anticipate that would happen. We were already bullish on product tankers and VLCCs anyways, just because of the structural nature of the business and the fact that the ships are getting older and the new builds aren't coming. This is just basically, been rocket fuel for rates. And so that's a consequence. And so there are consequences to foreign policy that are now going to affect Europe and the US, to the point of, how long does this go on for? How long is the Red Sea closed? I mean, the Houthis have actually said that they want to challenge maybe even getting the Straits of Hormuz closed. I'm not saying they have the capabilities of doing that. This is the kind of uncertainty and chaos that's not conducive to calm markets. This causes volatility and this causes opportunity. So again, we were in the right place at the right time, but we've seen a lot of those stocks in the portfolio that are engaged in shipping doing well. Again, I can't control this. In a perfect world, I would dictate, how it would be the most equitable solution. I'm not the king of the world. I never will be. And so all I can do is understand what the rule book is for the game that I'm in and play the game to the best of my advantage, because I have an obligation to take care of myself, my family, and other entities that rely on me. And so I'm going to do that. So this is it, folks. This is kind of a good visualization. So yeah, there's still ships transiting here, but an Indian chemical carrier got hit the other day. So it's just this is going to continue until it doesn't continue. And lobbing tomahawks at the Houthis isn't going to do it. People don't understand that Saudi Arabia fought a war against these people for the last decade, and they didn't subjugate them. And they had the full backing of the United States. They were using U.S. weapons. They were bombing them. They were starving them. These people have, I don't agree with their theology and their mentality on some things, but I've known some Yemenis, and these people are a very resolute people, and they're a very martial people, like the Chechens. I mean, they are like built for war, and they've been at war constantly, and it's just part of their ethos, I think, and they're not going to back down. They're not going to surrender. I mean, they went through starvation. There were, hundreds of thousands, millions of people starved to death there because of embargoes and stuff. They still didn't lose. Saudi Arabia finally gave up trying to fight them with the full backing of the US. So lobbing a few cruise missiles at them isn't going to get it done. Okay. So we'll see what happens. But, the longer this continues, the longer rates stay higher and the cash flows will explode at various tanker companies. I remain long-term bullish on oil. Here's a good tweet to remind you of why you should be too. Of course, in the short, medium term, you're going to have volatility, cyclicality, but I think we're in a secular, again, long-term resource bull market. Here's why. This is pointed out from this chart, which you can't really see the best, but you'll kind of get the point here. It says, this is not talked about much and why I like energy. If India and African countries increase to just 4 barrels a day, it's actually 4 barrels, I believe, per person per year. I think this is a misstatement. But anyways, oil demand would increase by 20 million barrels a day. Okay. U.S. consumption is 21 barrels, 0.8 barrels per capita per year, and the same in China. So if you even got like to 4 barrels a day, which is only 20% of what the U.S. and Canada use, you go from 104 million barrels a day to 124 million barrels a day. Maybe we can get there, but maybe we can't. So this is why I remain long-term bullish. And then factor in again, that's going to happen, right? Because those countries are going to continue to advance, and they need, in order for your economy to modernize, to grow, to get better, to wealth increase, you need energy inputs. and oil and petroleum are one of the main inputs because of all the advantages that they do have: energy content, portability, storability, all these different things. And so this is why I think you need to remain bullish long term. Again, it doesn't matter what happens in the US and Western Europe. They want to put people in 15-minute cities. They want to restrict, they want electric vehicles. All that oil will be burned in the emerging markets. That's just how it's going to be. And so if you don't want to burn it in the US, they'll burn it in India. It's not a problem. And so, again, you're still dealing with, like I said, 5 to 6, 7% a year of depletion worldwide. And you've got to, so you're in that same situation I've said before, where you've got to find and bring online, 6, 7, 8 million barrels a day every year of new production to replace the declines that are just relentless. So there you go. Here's Indian demand. You see it did during the pandemic. It's already recovered and exceeded pre-pandemic levels. It will continue to move higher over time. This is an illustration of what this guy was talking about here. Here you go here. So you have, this is your millions of tons cumulative each year from January to December. You can break it down. That's why I really like the BP energy report every year, because you would get real-time information yearly. But you can still find this information. You can go out there and find it. And this is what's happening. Again, I remind people, just the one vignette that I like to talk about. One of the portfolio entities in the Actionable Intelligence Alert newsletter is invested in a lot of companies in India. It's not an ETF. It's a private company that invests in other companies in India. One of the holdings is the third largest airport in India. Same thing. They did an expansion and they kind of took this hit during COVID because nobody was traveling, but it's recovered. And one of the things that I like about to remind people is, like, the total amount of civilian aviation planes, like 737s and all that, in India is only like 700 or 800 planes. Okay. And for the entire country with 1.4 billion people. I've said this before, Southwest Airlines here in the US alone has 700 airplanes. So you have a situation where, I think I saw another graphic somewhere where India is right now has the most planes on order with Boeing and Airbus than anybody else, like 1,100 planes. So, yeah. The demand on oil growth is going to be relentless in these emerging markets, because they want to travel too. They want to do what you do, and you're not going to deny them. And if you think you are, you're mistaken. It's not going to happen. And you can not burn oil here. You can restrict travel here. All that petroleum will be burned in these other places. It's just that simple. Positive comments from Schlumberger, the big oil field services entity. They see more offshore growth. They go down here and just draw your attention. It says, quote, as global energy demand continues to increase, international production is expected to play a key role in meeting supply through the end of the decade, especially output from the Middle East. Chief Executive Officer Olivier, whatever, I can't pronounce his last name, says, follow-on statement here, offshore remains another distinct attribute of this durable growth cycle, serving as an important source for production growth. And so I encourage you to go listen to the conference call if you're interested in offshore or oil and gas development. These people have their fingers in everything. They raise the dividend. Their forward guidance is good. Yeah, I'm bullish on, ultimately uranium's my thing I'm most bullish on, but offshore oil field services is the second thing that I think is similar to uranium. Not maybe as great, but very similar. So I wanted to point this out. I talk about the shiny object and how people fail to make money consistently in the markets, which was me many years ago, until I figured out, what I was doing wrong, which was chasing shiny objects. And so when you chase a shiny object, you're attracted to things in the media, what's moving up, what your ex-brother-in-law told you at Thanksgiving, stock tips, because he's making money and you're not, so you buy. You're the last one to hear about it, and then you buy at the top. So chasing shiny objects basically is buying high and selling low. And so Rudy Havenstein, this is another person you should follow. He's kind of good commentator, some sarcastic stuff, comedic stuff, but very good. He says this here. He says the best stock fund of the 2000s, Ken Hebner's 3.7 billion CGM Focus Fund, which rose more than 18% annually. Sweet. I remember this Ken Hebner CGM fund. It was constantly on advertising, like on CNBC. They would talk about how he was killing everybody else with his returns, which he did. He was a very good manager. And so it goes on here to say, so how did investors in that fund do? Maybe a bundle, right? And then it goes on here. There's an article that I will attach to this. It's an archive article from the Wall Street Journal from the 2000s. They did the research, and I've pointed this out before. So again, how did investors in that fund do? They made a bundle, right? Well, basically, the typical CGM Focus Fund shareholder lost 11% annually. Why? Because when the thing went up and got a lot of press, people moved money into it. They chased the shiny object. They bought at the high. Instead of just understanding that this guy's methodology was buying growth stocks and just holding them, they tried to trade. Okay, they were going to trade. They were going to, because they want to get rich quick. And so the advertisement would come out on CNBC. They would have it on in the background. Ken Hebner's CGM Focus Fund was up 27% last year and an average return over the 18%. Okay, and so they would call up the mutual fund or whatever, or the broker, and move all their money into the CGM fund right before, yes, over the decade, he averaged 18%, but how many drawdowns did he have? And so that's what happens. It's not a straight line, folks. I've talked about this many times. This is a mistake that most people make. They don't have a philosophy. They don't have an investment theme. They don't have a plan. They just chase shiny objects. They hear something. It's even worse now. They didn't have the internet to the extent that we have it now, and the social media like we have it now. And so they get all jazzed up. You can see it, man, on social media, and whenever something starts rocking and rolling, then all the activity picks up, and then people are jumping around like frogs on lily pads in a pond. And that's not how it's done. You have to understand what you're doing. I think that I have a good philosophy, which is to look for things that are undervalued or extremely undervalued, that are unloved, and that have some type of catalyst that I can articulate, that I can create a narrative around that makes sense and is logical for some type of turnaround or some type of ability to go from hated, unloved, terrible conditions to slightly less bad. Okay. You don't have to have it turn into, everything reverse. It just goes from horrible to slightly less bad. And that can be hundreds of percent of return, but it takes work and it takes time. You have to have the patience to let it develop. It doesn't work every time, but it works enough where, again, we hit these home runs, and it makes up for the mistakes that we make. Not only does it make it for the mistakes, it still gives us a market-beating return. Sometimes we have to take a loss. Sometimes we make the wrong conclusion on something, and then we have to get out of a position. But if you let the positions run and you're correct in your assumptions, then you get to a situation like with uranium, which went from terrible to less bad to now it's a growth industry. Everybody wants in, everybody gets it, everybody's commenting on it. People created newsletters around it, yada, yada, yada. When 5 years ago, there was 2 or 3 people talking about it on the internet. So that's how I do this. Same thing with offshore oil. Is oil the same opportunity it was when we had that down day and we were negative 47% and you could buy Athabasca oil sands for 11 or 12 cents a share? No. Was it risky to do that? Yes, because if oil didn't get above $50 a barrel pretty darn quick back then Athabasca wasn't able to cash flow sufficient to service its debt. And so there's no crystal ball. You're taking a risk. You're speculating. But that oil is not going away. We actually had articles, guys, during the pandemic where people were coming out in what's considered legitimate publications, the New York Times, the Wall Street Journal, the Financial Times. This is our opportunity to get off oil. See, we don't need oil. we could just do this in perpetuity. This is ridiculous. That wasn't going to happen. And so oil wasn't going to stay negative, and it wasn't going to stay at $10 or $20 a barrel. It wasn't the end of the oil demand. It was a ridiculous assumption. And so if you bought these things, that was when, that was like free money. Walk over, the safe has hit the ground, the door popped open, and there's a stash of cash in there. Walk over and pick it up. Now it gets more difficult as all the bad news comes out and the majority of people understand that that's not going to happen. Well, then everything reprices. That doesn't mean there's still not opportunity. It's not the same opportunity. So looking for those home runs, they're far and in between, but we have to be ready for when they come. Again, as Warren Buffett said, you're standing at the plate with no balls and strikes being called. So you can stand there and wait for your perfect pitch to come in and then crank it out of the ballpark. You just have to have patience and understand when an opportunity is presented to you. Don't chase the shiny object. I will put a link to the archived article. I think you should read it. It will be very insightful for you. You have a guy here who averaged 18% a year. All you had to do is put money in, dollar cost average in, and not do anything except sit there, and you would have done very well. Instead, the majority, the typical fund shareholder of that fund lost 11% annually. That's unbelievable. That's the retail mindset right there. And it has not changed. It's still the same in the 1920s, the 1950s, the 1980s, and nowadays. Human nature does not change. So I wanted to talk a little bit about, this is getting a little bit long, but I wanted to talk about something. It goes back to the age of chaos. This got sent out to an email that I'm on an email list, but I thought it was interesting. Americans have lost confidence in institutions, and why not? And just look at this. It says Americans' confidence in political and social institutions continues to decline. Please tell me how much confidence you yourself have in each one. A great deal, quite a lot, percentage. And so the Supreme Court, 27% confidence. Congress, 8%. The presidency, 26%. The church or organized religion, 32%. This is part two because this was a big graph. Public schools, 26%. Newspapers, 18%. This is why alternative media like mine and others, many others, is taking off. This is what they're trying to squash. They're trying to squash Substack now, and come after certain people because they don't like the views of certain people. I don't care what view you have. You can talk negative about the Holocaust, the Jews, black people. I don't care. I don't have to listen to you, but you have the right to say it. You can stand out there on a box and scream it, and no one's going to listen to you. Okay. But, we have these we have to have free speech, and we don't have that. We have a media that's compromised. It's part of the managerial state that are, again, the media, the mainstream media being, they push they are enemies of the good, the true, and the beautiful. They are friends of chaos, evil, and ugliness. Television news, 14%. I mean, I don't have a TV. I wouldn't watch television. I wouldn't watch the news on TV. That's ridiculous. If you're doing that, you are really doing yourself a disservice. And then news on the internet's even 16%. So, this is the problem, guys, and everybody can see it. And that's why, people are disillusioned, and that's why we live in the age of chaos. And that's why I think that we're in terminal decline. These are not indicators of, look at where they've dropped from. They haven't always, like the Supreme Court back in like the 70s and 80s was, above 50%. People had a great deal of confidence in the Supreme Court. Now it's down to 27%. Same thing with Congress. It was at least, 40%. The presidency, 70% at one time, constantly in decline. Look at the churches, okay? This tells you about the Western church, American churches, which are totally weak and ineffective. Okay. And I put this, I'm going to take orthodoxy out of that. Okay. But look at the evangelical, ridiculous prosperity doctrines, these mega, it's just ridiculous. And, there's no confidence. People don't care. And you turn into a godless nation. People just, they don't want to have any part of it because they don't have confidence in it. And these media things is, to me, the best. I mean, this is just, again, I saw that, more and more of these ridiculous mainstream media outlets. Sports Illustrated had to close down. Okay. Because why? They fat girls and transgender women on the swimsuit issue. No one buys. That's not their market. Okay. Their market was insightful, well-written sports analysis and commentary and editorials and news. When we were kids, man, we would just be throwing those sport. Everybody had a subscription to Sports Illustrated, man. It was great. The cover photography, the photography was awesome. And then you would get the once a year bathing suit issue with these top models wearing bathing suits. That's the market, right? Young men, sports, and hot girls. And so they destroyed that. You see these different internet left wing, they go out of business. I just think what the LA Times just laid off a bunch of people. I mean, this is because nobody's buying their nonsense. People want news. They don't, the elites, the managerial class, the enemies of the good, the true, and the beautiful, okay, are a small sector but they control everything, okay? They control everything, and the majority of us don't buy it. And that's how you change things. I mean, said this earlier. Throughout history, it's taken violent revolution. Mao said that, change comes out of the barrel of a gun. I don't advocate that. What you can do is this. You can have children. You can raise them correctly. You can associate yourself with other like-minded people. You can stop giving money to people that hate you. You should not be giving money to Disney and to these media companies and cable TV and sports ball and all that stuff. That's how you can fight it, okay? Individually. You can be a stand-up, virtuous, upright person in your dealings with other people, okay? And it's a small process over time. When this whole thing collapses, which it will inevitably in the West, there's going to have to be a remnant of people that have to pick up the pieces and repair it. It will take wealth. It will take virtue. It will take intelligence. It will take motivated people, strong people. And there will be that remnant. That's how you can fight the system. That's how you can create change. You may not see the tree flourish in your lifetime, but you can plant the seed. That's how you can create change. You can also become part of a revolution, and they will kill you and put you up against a wall. You can be a martyr. I don't recommend that. I recommend taking the slow, steady, you can look up articles or images of where people have placed a stone under dripping water for hundreds of years, and you can see how the water over time has eroded that stone. Okay, it doesn't happen in a year or two. It takes decades or hundreds of years. That's what you can do. You can plant the forest that your descendants will reap the benefit of. And you can withhold your support. Okay, a regime, even an evil regime, requires the consent and the acquiescence of the people to go along with the system. Okay, you can watch. Maybe I should look at video for the video where during the fall of the Berlin Wall, the Politburo in East Germany, there's all these people going back and forth trying to go into East Berlin. Everybody could see it was the end. And they made a comment on TV. Some people at the Politburo, they said it the wrong way. They said that if you go to the gate, we will let you go into West Germany, and you don't need a certain stamp or whatever. And within an hour, there were thousands of people there. Okay. And you can actually see the video. The border guards just shrug and open the gates and let everybody through. There's nothing. That was the beginning. That was like pulling the string. The people no longer supported and wanted to go along with the program, and they just withdrew their support, and it collapsed. Same thing in Romania, in these different countries. Okay, they just said, we're not agreeing with this anymore. We're not going along with this anymore. Now, there was some violence involved in Romania. I get it, but in the U.S. and in Western Europe, you don't have to become discouraged. You just need to keep doing what you're doing, be virtuous, withdraw your support, do business with people that are like-minded, that are virtuous, that are good, that are allies of the good, true, and the beautiful. And don't deal with chaotic people. Don't deal with evil people. Don't deal with the ugliness. Okay? That's what I would suggest. And then you see they just implode on themselves. Sports Illustrated's out of business now because they didn't understand their market and people withdrew their support. I mean, these are small microcosms, but this is exactly how it works. So that would be my recommendation. And then again, focus on your own self, not worry about, Harry Brown, which was a libertarian guy, wrote a book, How to Live Free in an Unfree World, I think is the name of it. You should read that. He explains why you as a single person in a country of 300, you're not going to convince 330 million people to agree with you. That's a waste of time, but there's a lot of things you can do to live free in an unfree world. All right, moving on. This is what I found fascinating, if this is accurate, and if I'm reading this right. So basically on the right, what you have is the number of deaths caused by alcohol use in Russia from 1990 to 2019. And you will see this during the collapse of the Soviet Union, alcohol deaths increased. And through this whole period, alcoholism is a very big thing in Russia and in Ukraine and these Russian countries, put it that way. I've seen it. I've been there many times. I've seen how it works. I've seen people that are alcoholics and how they exist. I follow some other things. It's really bad. You see it's declined over time, though. I'm not going to get into the reasons why this has declined. It's kind of upticked recently, but this was the period where they had a lot of decay and disorder. This is when the Soviet Union collapsed, basically, in this time frame, and the deprivation and the conditions that were present there. This is why the Russians are never going to. This is why Putin's so popular. I'm not going to get into the whole situation, but things were really bad in Russia, and the West, when Boris Yeltsin was in there, and there's a good book about guys that went over there and the deals they were doing. There was really a lot of exploitation and a lot of stealing of resources and things like that, and a lot of animosity towards foreign financial interests. And so a lot of people were suffering. So a lot of people turned to alcohol, and you see what happened, where you had, up almost at the peak there in 2002, 2003, 30 people in 100,000 were dying from alcohol-related deaths. Now you go over here to the left, and we have U.S. drug overdose mortality rates. Age-adjusted rate per 100. I don't know what that means. I don't know where this data set coming from, but we do know that we have, if this is actually true, look at how it's exploded over the years from 2000 to here, where we have, this fentanyl thing is out of control. And so, that's enabled by the open border. It's not the only reason. A lot of it's because of the despondency, because of the lack of just the total breakdown that we've been talking about in the age of chaos and how it's spilling over. And if this is true, you have possibly the same level of deaths happening per 100,000 that the Russians were seeing with alcohol, where you have 30 in 100,000 are U.S. drug overdose deaths. Okay. And this, nobody during this time, this was when Russia was on its knees. Okay. After the fall of the Soviet Union. And so this is what I'm talking about. This is the age of chaos. People are turning to drugs. They're turning to all of these behaviors. For whatever reason, the government is enabling it. They don't, there's the open border, not dealing with these. I mean, fentanyl needs to be dealt with. And we can have a discussion about cannabis being rescheduled from Schedule 1 to Schedule 3 and some of these other things. This fentanyl epidemic needs to be done. This is like war. You deliberately are bringing stuff in here that's killing people at a level that's unbelievable. And nobody cares. Nobody's saying anything. This is not a statistic that is positive. Okay. This is not how a world power, what this is just another part of the termite eaten out edifice under this so-called U.S. empire, and why another facet of why I think we're in decline. And again, you're not going to fix it by voting. Okay. It's just that simple, folks. You can maybe, we have a trend where we're in decline, and it's because the people are not virtuous. It's just that simple. That isn't speaking to you individually. I'm saying in general. Okay. We're enabling this. We're allowing this. We think we're all right with this. And so We'll see what happens, but if this is accurate, this is like you're basically at the same level of what when Russia, who everybody likes to bag on, was with alcohol deaths. I mean, that's not, I don't think anybody thought Russia during the, fall of the Soviet Union, that period afterwards, was like, in good shape. And so why is the US? I mean, you go to any of these, go on YouTube if you're interested. This is horrible that this is allowed in this country. They have videos on YouTube where the Kensington district of Philadelphia, or street, I don't know if it's a street or district, and the people drive around or walk around, and there's all these fentanyl junkies living on the street, and they're just standing around or moping around in zombie-like states, laying on the street with their pants down. And this is allowed in a major metropolitan city in the US. How is that like good? How is that allowed? How is that compassionate? Why isn't anybody doing anything about it? Why isn't the government, who has a primary responsibility to provide order, not allow chaos, is just allowed this entire chaotic, and it's the same mentality. I attribute it to stupidity and incompetence and just, evil people. Some people are saying this is like, a planned event. Be that as it may, you should go there and look at the video. It's unbelievable. And that's just the only city, LA. I mean, last time I went there, I was just shocked at what I saw there. And I don't know, people live in this. I guess if you get used to it over time, I don't know. People have said, when they've moved away from these areas to places where their places is calm and it's not chaotic, that they finally realized, like, what was I doing staying in that environment? So this is something that's not positive that I think needs to be dealt with, but we'll see. This all was happening during the collapse of the Soviet Union and the ensuing years of chaos in Russia, and you're at similar levels, and this thing's going straight up. So I don't know. We'll see. All right, guys, that's it for this week. Appreciate the support. Channel continues to grow, and we'll talk to you next week. Thank you.